Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. We continue on with the ISE webinar series where we bring in special guests. Today we have Rob Booker. Rob Booker, the Motley Fool of Foreign Exchange, as he's known. Rob is a trader, he's a writer, and he's a trainer. And he has many offerings at robbooker.com. Rob will be talking about some offerings that he has. Rob will be talking about what's going on with the U.S. dollar. And again, there's a lot going on with the U.S. dollar. So I'm really pleased to be bringing on Rob Booker. And Rob will be talking about his views of the U.S. dollar. Rob, welcome.
Hey, Steve. Good to be here.
Glad to have you.
Hey, I got Dave Murphy with me today, too.
Hi, Dave. Steve Meisinger here.
Steve, good to be back.
Well, I do certainly have, I have probably the least correct opinion of the U.S. dollar of anyone recently, of course. I've actually been a dollar bull for a couple months, actually, Steve, which I know sounds incredibly ridiculous. But certainly is a timely time to talk about it because today Bernanke in his testimony expressed reservations not only about inflation, but then simultaneously expressed his reservations about growth. And the guy, better than anybody, he came into the position of the chairman of the Federal Reserve on the premise that he would be more transparent, and I can't figure the guy out. I don't think he says.
I think he's taken some lessons or classes from Mr. Greenspan then, huh?
Yeah, and I think that what's kind of been on my mind lately is that there's never been another, so I really actually like the dollar right now. So I'm dedicating the Doors' Love Her Madly to the dollar. But I think that amidst all of this discussion about the economy and IndyMac and Countrywide and all of those different conversations that we've had, and growth and inflation, all of those different conversations, and there's a ton of validity to all of these viewpoints that the dollar is in trouble. And I don't mean to discount those opinions or speak negatively about those opinions. However, it's really fitting that we're talking today about options, Dave, because I've had this opinion about the U.S. dollar, about the resurgence and the possible resurgence of the U.S. dollar. And we've been talking about this for months, actually. I mean, for quite some time. And there's never a better way to express this than options. For those of us, for example, who have been long the U.S. dollar, if you've ever experienced a situation where you were long the U.S. dollar when you shouldn't have been, or short the euro when you shouldn't have been, or in any other instance when you traded the spot currency market, there's only a certain amount of time that you can ride out a move, because if it goes a certain distance against us, Dave, in the currency markets, in the spot market in particular, you get blown away just because of the distance that it's moved, right, Dave?
Yeah, exactly.
And it's not like you or I have ever experienced that. No, we've never. Neither of us have experienced any.
No.
Yeah, and neither of us have experienced any recent losses whatsoever due to the rise in the euro. What's interesting and differentiates the options market, and people can lose money, Steve, equally easily in the options market or the spot market, correct? I mean,
correct, absolutely. As long as you have an account open, I think I know where you're going with this, the idea that you have limited risk. So if you're really, really wrong in the options market, you lose a limited amount of money. I think that's where you're headed, right?
Yeah, and that's exactly kind of the point, is that there's no guarantee in trading, and nothing that we're going to discuss today is a guarantee or a fail-safe or a get-rich-quick idea or anything like that, because it's just equally easy to lose money in options and in spot trading. But the nice thing about the options side, for those of you who are differentiating or want to know the difference, why a currency trader in the spot market would be interested in options, It's because if I want to express a longer-term view of the U.S. dollar, and I want to give the euro a lot of room to move against me in terms of number of points against me over a certain period of time, I can express my opinion about the market in options and ride this decision out for a much longer period of time than my account could withstand in the spot market. So just to start things off, that's the reason that a spot currency trader or two like Dave and I would be even remotely interested in this, because my long-term view, my 12 to 18-month view of the U.S. dollar is that there's hardly anything more that you can hear about the U.S. economy that could possibly make you feel any worse. I mean, you've heard about the banks. You've heard about inflation. You've heard about the risks of growth. You've heard about the problems in the housing markets. You've heard about the problems with the price of oil. We've heard about the problems with the consumer spending. I mean, I don't know.
Lots of people are saying this is reminiscent of the 30s or whatever in the Depression.
Right,
They're
exactly.
already saying it's reminiscent of it. So we've heard that it's hit a bottom.
Yeah, we've heard all those things, and so I know that the euro and the yen and the pound and all these currencies can continue to appreciate against the dollar. I get that. I mean, I get that they can continue to do that. But if there's even remotely any negative news, and in particular today we're going to talk about the yen, we're going to talk about the Canadian dollar, and we're going to talk about the euro. In particular, and this is important with respect to what we're going to discuss today because I have a sort of a bias on one side or the other. If anything remotely negative is expressed about oil or Canada's economy, or anything starts to sort of come out of Europe that's even remotely negative, and I know Europe just finished raising rates one more time, and the euro actually initially fell on that news. If we start to see any type of negative information come out of Europe, and this is a fundamental view, the euro has so much more to lose against the dollar. The dollar's already been beaten up in a relatively strong economy over the last few years.
Right.
I mean, we've had a pretty good run. I know a lot of people have some opinions about the deficit and about blah, 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 yada, yada, yada. However, the euro's appreciated extraordinarily. It's appreciated, I think it's 48 to 50% over the last 7 years against the U.S. dollar. The U.S. dollar has virtually lost every single year against the euro.
Right.
Since the advent of the frickin' currency pair. I mean, since the advent of it, it's been destroyed. Who stands more to lose now, Dave, if European banks start to reveal some of the same news that we've come to see in the U.S.?
The euro does.
The euro stands to lose. And economically speaking, if oil prices fall back down to the 120s, even temporarily, the Canadian dollar stands to lose against the U.S. dollar. So remember that don't ever get so caught up in a trend as your friend that you sort of believe that the trend can never do you any wrong. And that's what we're going to talk about today. We're going to talk about how far is too far and how trendy is too trendy for a currency to go. And it's a repeat and an update. There's some updated information on the presentation that we gave the last time that we were here, Steve.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.